Hey there, Whitby, and welcome back to another week of the weekly Whitby Wrap-Up, the show where we have all things Whitby real estate covered for you. As promised, we've got some fancy graphs this week, so please stick with me on the other side of this intro to check them out. Hey everybody, how's it going today? It's Rob Marsiglio back here with the Robert Marsiglio Realty Group. I'm recording this on May 31st, which is the hottest day of the year so far. We're under a heat warning. I hope everybody is staying hydrated out there, enjoying this beautiful weather. Again, as always, I want to get into the numbers with you this week. Like I said off the top, we got some fancy graphs to go through the at least detached and townhomes. Maybe we'll incorporate some more in the following weeks. But without further ado, let's hop right into these numbers. As promised, we have the fancy graphs this week. So I think it's just going to give you a better visual representation of kind of where we have come from in this market, kind of where we're going, historically what it's looking back at. So I've pretty much charted out the past year. The first chart we're looking at here is new listings. Detached homes are in red and townhomes are in blue. So you can see that this past week, this is from May 22nd to the 28th, we had 53 new detached listings. That's actually the same as the week before. We had 18 townhome listings. That's up one from last week. And I also just made note of the high. So the high for listings for townhomes was 30. That was at the beginning of April. And that same week, we peaked in new listings for the detached side at 85. How about on the sales side? A big drop off in sales on the detached market, down to 22. We were hovering right around 30 the week before. And it was actually last year around this time that we have the previous high for the year, which was 60. So 2/3 down from where we were a year ago at this time. How about on the townhome side? 7 sales, which is the same as last week. And that is down from a high of 17 townhome sales, which happened in early March. Median prices for both property types here. So again, 1,122,000 was the median price on the detached side and 865,000 on the townhome side. So interestingly here, the median price for a detached home, it's actually less than it was at the peak for a townhome, which was 1.18 million, and that was back middle to end of February. Detached homes peaked a little earlier in February at 1.6 million, so you can see the run up from last May, when we started seeing a lot of the activity was here in the November, December, January, February markets, and then it's been a slow tailing off ever since then. And you're seeing the same thing on the townhome side with this pretty defined peak, and it's been petering off ever since. You can see the detached homes have rallied a bit in the last few weeks, but is this a trend that we're going to start seeing? Will the next round of rate hikes impact things further and drive these prices down even more? I think that's probably the more likely of the two scenarios, but we will have to wait and see. How about our days on market? So this is year to date again. Same thing, detached in red, townhomes in blue. A bit of an outlier week in early January. Not a lot of homes to choose from there, and it's probably why something that was sitting on the market for a while sold in this week. But you can see we're hovering around 5 as the average days on market, maybe bumping up to 6. Now we're sitting over 10. So for this week, it was 10 days on market for detached homes, and it was 8 days on market for townhomes. So townhomes, they're actually, maybe the affordability factor is making them a little more attractive right now. You're still looking over $1 million for a detached home, so that market, maybe that's why it's slowed down a little bit more than what you're seeing on the townhome side. Again, is this a trend where townhomes have kind of leveled off and detached homes will continue to sit on the market for longer? I don't think so, but we'll have to just look forward to see what happens in the coming weeks. And then here, this is another one that we've been tracking, was the suspendeds and terminateds for both of these property types. So you can see early in the year, nothing was being suspended or terminated. Pretty much everything was selling. And then here, middle of February, beginning of March is when we started to really notice the slowdown in activity in terms of showings, in terms of offers. And it makes sense that that is lined up with an increase in suspended and terminated listings every single week. So you can see a big peak a couple times here on the townhome side and the detached side. This past week we had 28 on the detached side suspended or terminated and 18 on the townhome side. So that is, again, that's about the high. I think this was 19 here in early April. It was a bit of an outlier week there. So you can see townhomes slowly creeping up there in terms of more suspendeds and terminateds. Whereas detached homes, maybe we've seen them plateau a little bit. It all just depends on how many properties are coming to market still. But again, we're definitely not seeing the prices we were earlier on. And I think sellers are starting to get a little bit more used to this market. Their expectations maybe a little bit more realistic. So maybe we'll see these numbers kind of flatten out. Now, I couldn't cut you off from the spreadsheet altogether this week. We still have to check out our active numbers. We had 148 active listings as of today on the detached side, which represents 1.15 months of inventory. So you can see that really peaked early May and it started to come down. Less listings hitting the market. Sure, less sales as well. Terminateds have kind of stayed up. It's all resulting in a little bit less inventory on the market. And on the townhome side, a similar story. We have 44 active listings now, and that represents 1.42 months of inventory. So that has started to come down at least from the week prior. You can see we're looking at a high going back to the beginning of April for suspendeds and terminateds on the townhome side. Listings, stayed relatively low compared to what we have been seeing too. So with more suspensions and terminations, less listings, it's going to result in less active listings and lower months of inventory. Slow week on the semi-detached side. There were 4 new listings and no sales. So there's 12 active listings in total right now, which represents 3 months of inventory on the semi-detached side. And you can just see with a smaller market, it's much more volatile swings in months of inventory. So again, let's check these numbers out later this week when I do my monthly recap. It will give us maybe a little bit better indication of the true kind of months of inventory / just a true picture of where the market's going on the semi side. We will wrap up as always with our condos. So we have our condo townhomes, apartments, and then our total numbers over here. So we had 5 new listings on the townhome side with 1 sale that sold for $615,000. It was on the market for 13 days and it still sold for 23% over asking. We currently have 10 active listings for condo townhomes in Whitby. On the apartment side, 9 new listings, 3 sales, $655,000 was the median sale price there. 7 days on market is how long they're sitting there for. Again, on average, selling for 21% over asking price. And we have 13 condo apartments active right now in the town of Whitby. Lastly, we will take a look at our showings and offers as we always do. Right now, we are sitting at 15.6 showings per new listing. So I know May was a bit slower pace in terms of showings than April was, but that's bounced back and we're actually up just over 1% from month to month in terms of showings per new listing. As for offers, it's hovering right around 1 right now. So still down from the month before, but not by too much. And as we predicted earlier on in the month, just the trends for the expired, suspended, and terminated listings, we did hit over 200 for the first time this year in any given month. So we'll keep our eyes on that going into June. So looking forward, we want to keep our eyes on the rate announcement that the Bank of Canada is going to put out on June 1st. The previous rate announcement, where they raised the overnight rate by 50 basis points, had a pretty big impact on the market a lot quicker than they thought it would. I think that it affected buyer sentiment right away. We were already seeing buyer fatigue back in February, and this may have just been kind of the piece of straw that broke the camel's back in terms of buyer sentiment. So we do still have some serious buyers out there. I think if you are a buyer at this time and you have locked in a rate right now, you're in as good a position as you're going to be for the rest of the year, because I do think it's going to be a quieter summer than we're used to. Summers always do tend to slow down a bit, but I think we'll see a bit more of a slowdown this summer than we usually do. No COVID restrictions, or very few for the first time in a couple summers. And like I said, just coupled with the fact that it's usually a little bit slower, I think we'll continue to see that. So again, keep your eyes peeled. I'm seeing a lot of sources saying it's going to be another 0.5% raise in the overnight rate. And I think that definitely will have an effect on the market sooner than later. Let me know what you thought of those charts that I threw together for this week below. I promise to have some more. We'll try and get all the data onto graphs so you can kind of just see visually. I think it's a lot nicer to look at it visually that way. My monthly update will definitely have all sorts of graphs all over the place, so please tune in for that one later on this week. I will be back next week with another weekly Whitby wrap up, and until then, please stay safe, try to stay cool, and cheers.